Welcome, Benzinga Nation. Everything just about and anything that we do is for you, the retail investor. And, growing up, so many times we heard of SPY. It's like, hey, you want to have diversification in terms of ETF. You want to make sure you don't have all your eggs in one basket. Now in 2024, you can have a diversified portfolio in different type of sectors, whether it's in the AI space, whether it's in the cannabis space, whether it's even in the music space. And those are the guests that we're going to have coming up here later today. But this show is all about how you can have some exposure to different sectors and ETFs to go ahead and get some ROI in your portfolio. And first up, we're going to go ahead and have Ivana from Spear Invest, as she's the founder and CIO. Ivana, welcome to the show.
Thanks for having me.
Absolutely. I'm glad to talk to you. I mean, I've been taking a look at your, investments, especially with NVIDIA having such a great run. So I'm so glad to talk to you, especially with AI being the hot buzzword. But before we kind of dive into it, give me a brief overview of what is it that your company does.
Yeah, absolutely. So we focus on B2B technology, and we do deep dive research into really like a pretty broad area of companies. We cover about 120 companies, and each year we determine what are going to be our focus areas for that particular year, depending on bottoms up research and what we're finding in the field. So this is how we were able to identify AI as a trend early on, by talking to companies and figuring out where they're investing their R&D dollars.
And I know I've seen you in so many interviews, right? Whether it's on CNBC, Yahoo Finance, all those great platforms. Give me a quick kind of insight in terms of your background, especially how you ended up in CIO. Then we'll dive into the AI side of things.
Well, I spent over 15 years covering industrials and industrial technology companies at several hedge funds and banks. I worked at Citadel, Millennium, the platforms, the usual suspects. So really the way I designed this portfolio would be the long book of what you would run at a hedge fund. So if you're a long-term investor, you don't necessarily want a market neutral book, right? So you're going to generate better returns if you are taking more risk, right? So if you can take risk and be patient, you really just want the long book, because that's what generates alpha. So that's what we're really trying to do here: run a very concentrated strategy where everything is based on the like fundamental research, but really the key is the generating alpha and beating the passive indices in each of those focus areas that I highlighted.
Well, and you've been doing a great job at it, right? Let's talk about some data points here in terms of facts. You have significantly outperformed the S&P 500 in 2023, where the SPY was up about 26%. The NASDAQ was up about 45%. Spear had about 88% growth. You talked about the success and the reasons behind it. What are you expecting the projected growth to be for this year? And let's even talk about 2025.
I mean, we don't really project our returns going into the future, but I would say that we are in the very early innings of this technology cycle, and that's what we're hoping to capitalize on. And last year being a strong year, that's not really uncommon coming off of a down cycle. So, and we really only saw, like, out of our coverage universe, we really only saw the semis and specifically NVIDIA stand out in terms of like delivering actual numbers. Everything else, it's really kind of like bouncing off the bottom. So once you see those earnings inflect, even for hardware, right? But then for software as well, as we get further into the economic cycle, you will see a boost from earnings as well for these companies. And AI is just generating this massive, it's basically like a catalyst that is making everybody reevaluate what they're doing, how are they spending their money. So it's a real thing where like companies are investing real dollars behind it.
I love how humble you were, like, hey, we had a great year, but hold on a second. So I love that. You got good people at the helm. Let's talk about AI since you brought it up. You've spoken to, experts across all the AI supply chains. I've seen your interviews in the past. What is the AI opportunity, and more so in terms of the growth expectations? Because if you want to talk about early innings, it doesn't really get as early as we currently are in terms of where everyone is about interested in AI.
Yeah, so I think you're spot on that. Basically, the near-term opportunity is on the hardware side. So we just did a webinar that just focused on this one layer of AI, which is hardware. And there are different areas within hardware. So there would be companies that provide products and services inside the rack. So this is inside the data center rack. And then there is companies that provide services outside, still to the data center, but it would be more like thermal management, power management, the actual casings, and infrastructure, and even energy companies, right? So we're seeing this year. So last year, most of the upside was on the compute side. And I think this is still where you want to be long term, because these are really good businesses like AMD, NVIDIA, are examples of chip designers, because they don't, the business model is so that they spend a lot on R&D. So it's very difficult for the competition to catch up, but they don't really, it's not a very capex intensive model. So when you see these like numbers coming through in terms of earnings, all of those are just generating great returns for shareholders. So still a lot on the hardware side, but definitely broadening out from just GPUs to just the entire data center, as now companies need to build the actual structure, right, and everything that goes around it. And then as we get into next year, or maybe even later this year, you're going to see opportunities as well on the software side. So software will just take longer to play out. It's not cyclical. So it's not like somebody's going to report like NVIDIA did 25 billion going to 100, right? So it's going to be like few basis points of impact from better pricing, and maybe better utilizations. So, but those businesses are also great because they are the ones that are innovating the data services stack, right? So we're seeing a lot of opportunities on that front. And cybersecurity is one area that I think is overlooked here and has pulled back pretty significantly. So in terms of like entry points, that's really where we're looking.
Yeah, cybersecurity is definitely one that's of interest, just in terms of where the nation may be under some dangerous aspects of it. But I want to quickly just go back to one final question. You mentioned NVIDIA, and I know it's one of the top holdings, if not the top holding. How else can your ETF kind of give us exposure to AI, especially, the Spear Alpha ETF here?
So I think on the hardware side, we like AMD and Marvell. On the cybersecurity side, we like the next gen cybersecurity leaders. So this would be Zscaler, CrowdStrike, and SentinelOne. And then on the data side, we really like Snowflake. We think it's fallen out of favor here, and we think they can get their act together with the new CEO. And the guy is a little bit kitchen sink here, just so they can deliver good results. But those are the names that I'd say I would highlight from our portfolio.
I'm glad you mentioned Snow, because I was literally a stock that I was looking at last night while doing research for this. But any final thoughts from you in terms of not just your ETF, but in the world of AI and safety aspects of it? Your floor is kind of all yours.
So yeah, I would say this is not for the faint. This industry is not for the faint of heart. So you definitely need to have a long-term horizon and be able to take advantage of pullbacks like we're seeing right now in some of the data, some of the cyber security companies. But the fundamentals look really solid going 3 to 5 years out. So we're very confident on the long term and trying to just kind of find the best opportunities today.
What I love about AI is that just about any industry kind of uses it, right? So I'm talking, let's take ChatGPT. That was like the first big, massive introduction, in my opinion, to the public, where it was kind of like text-based. Then you had the imaging side of AI that came out. Then you even have something as simple as, look, I use Excel, but I'm not the greatest formula guy. But now I can type in, hey, I want this cell to do this if cell B, whatever happens. And it just spews out, a formula for me to use. So there's so many different ways to use AI that I genuinely believe that we will get more output and greater production from our workers, who will find the best way to utilize it, whether it's changing it in tone aspect or whatever it is. So really, really excited to hopefully have more conversations with you, because we are just in such early aspects of this technology. Thank you for your time.
Thanks.
Absolutely. And that is going to be Ivana, who is the founder and CIO of Spear Invest. And, I'm sure a lot of y'all in the, chat that are watching this right now have used AI for many different things. I know for a fact I would have gotten better grades in school if I went ahead and had a chance to use AI. So it's really interesting to see where the technology currently is and where it can go. You had Sorrow that had some great things come out from open source AI as well. But let's go ahead and kind of move on. We talked about having diversification and having exposure to certain sectors if you didn't want to just go all in on one certain stock. And so we're going to go ahead and talk to Dan from AdvisorShares, who is the CIO and portfolio manager of MSOS and YOLO. Dan, welcome to the show.
Hey, thanks for having me on.
Absolutely. Thank you for taking the time here. I'm excited to talk to you because this is a space where I feel like 10 years ago, I vividly remember, and this is a cannabis space for the folks that might not be aware. I was playing basketball and I remember my friends being like, hey man, like cannabis stocks, that's like the next big thing. But I was so afraid to just, I didn't know where to go. I didn't know which companies to invest in. I was 21 years old, barely could make a layup. I didn't know how to read a sheet or a fundamentals or a 10K. So I'm really excited to see how y'all make that easy for folks. That being said, give me a quick overview of what is it that your company does?
Well, certainly. AdvisorShares actually has 17 different ETFs right now. We've tried to be an innovator in the exchange-traded fund space and, maybe create exchange-traded funds that others hadn't yet, or to fill a certain need in the investment space. So that leads us to being a innovative firm, having a number of investment firsts, and working very closely with the New York Stock Exchange and with NASDAQ on listings, and sending a lot of information to the SEC when we're trying to be a first mover in a certain type of fund.
What are some of like the advantages? You mentioned the 17 ETFs that you have. I feel like the biggest message whenever you're talking about finance and investing is, hey, ETF, you're diversified, right? Give me maybe one or two more advantages by being in an ETF instead of the average Joe trying to pick out stocks that they believe are going to go because their cousin Bob told them it was.
Well, certainly. Yeah. Some people know that an ETF is a fund rather than picking just the individual stocks in a particular space. But as you alluded to, a lot of people don't think of all the other advantages of an ETF or an exchange traded fund. Now, first of all, there's advantages over a mutual fund or a separate account. And that's the fact that it's listed on the exchange. You can buy it and trade it with limit orders, with stop orders. And an ETF can be an actually very tax efficient exchange traded vehicle. Let's say you think you're a stock picker and you're picking 10 different stocks, and one of those stocks has a 10 times gain. Well, now if you need to sell that stock, lock in your gains, you're going to pay taxes on that. What happens inside of an ETF, and it's probably too much to go into here, can be quite a bit more tax efficient. You might pay a tax when you sell your actual ETF if it's not an IRA. But the inner workings of the ETF can be much more tax efficient and useful, therefore, to investors.
So let's talk about, just give me a little bit of insight, because I'm sure there's such a nitty gritty aspect that goes into a well-oiled machine of the ETFs. But how do you kind of actively manage it, right? What differentiates from what you're doing to, say, an index passive base kind of ETF?
Well, that's a great question. And it goes to one of the main misunderstandings about actively managed. An actively managed ETF simply means it is not based on an index. It's not index following. It doesn't mean that it's overly active. It doesn't mean that it's a tactical strategy.
Yeah.
We have one ETF in our lineup that only rebalances once a year. And it's been a 5-star rated fund and therefore a very good performer from a portfolio strategist that has a great following, and that's Eddie Elfenbein of Crossing Wall Street. That fund is ticker symbol CWS, and it's done very well, only rebalancing once a year. We have some other funds that might rebalance monthly or quarterly, or can be truly active. And that means the portfolio manager has eyeballs on it, can make tweaks in that portfolio on any given day, even if they're not going to be overly active. Many times we try to have a long-term focus and not be overly active within a fund's management.
How do you go ahead and kind of stay ahead of the ETF landscape, right? What are some of the key factors that innovation comes with your product offering? For example, you mentioned how you only go ahead and make changes to the portfolio once a year, and that certain one that you spoke of, and obviously it's been doing really well, rated 5 stars. But how do you kind of stay ahead of the curve with innovation when it comes to the ETF landscape? Because I'm sure you have some competition on that side.
Well, there we're looking to, again, create funds that might fill a need or might fill an area of the investment universe that isn't yet filled. Now, on that matter, we were the first fund company to go for the full approval process for a cannabis ETF in the United States. We weren't actually the first one because another company changed an index into a cannabis ETF, but we went through the full process, had the SEC review it, approve it, gave them a legal opinion. And then more recently, we created a psychedelics ETF. It invests in, real biotech pharmaceutical companies that are on the cutting edge of psilocybin and other psychedelic type of treatments. And we have the only fund in that space in the United States. Some other funds that we have might be more mainstream, but we were one of the first funds to do a long short ETF. We were the first fund company to do a short ETF. That's not an inverse ETF, but a ETF that picks individual stocks to short. So again, we've tried to be an innovator. We didn't want to take no for an answer. We wanted to be creative and work well with our attorneys, our custody bank, the SEC, provide a lot of information and provide new types of funds that haven't been done before.
Yeah, and sometimes you do have those roadblocks with government agencies and you got to make sure compliance signs off on things. So I completely understand that aspect. One offering that I haven't really heard about yet that I'd like to get some insight on as a final question is the increasing the popularity of the thematic investing, right? Can you discuss any ETFs on that side, especially that AdvisorShares has offered with their investment approach?
Yeah, it's a great question. And ETFs can run the entire gamut. They can be a large cap growth fund, an international fund, or as you mentioned, thematic. And we think that's one of the most exciting things that an ETF can do now is provide a singular type of industry focus, sector focus. And one of the most important things about an ETF is I want investors to know and understand what they're investing in. And that means looking under the hood. So ETFs at AdvisorShares, we have cannabis-based ETFs like you introduced me with, our fund MSOS, AdvisorShares Restaurants ETF, ticker symbol EATS with a Z. AdvisorShares Hotels ETF, beds with a Z. The thing about these types of ETF, as example, is investors can understand them. It makes sense if they see the growth and what's happening with people dining at restaurants, getting delivery, fast food, fast casual. They hear about how these companies are combating and doing. So the other thing that people can do is look at our website and see the holdings on any given business day. So understanding what you're investing, it's a type of investment that makes sense to people. I don't think people should ever blindly invest in an and what's inside it. And that's easy to understand. It makes sense to investors in the thematic space if they see a certain theme that they think is going to grow more than the overall market.
Yeah. Yeah, I think the exposure to the hotel space and also the restaurant space, as you mentioned, is definitely unique, especially if you're trying to, maybe it might be hindsight, but kind of buy the dip, in the 2020s. And if, those type of pullbacks definitely is an interesting opportunity there. But thank you so much for your time, Dan. I really appreciate it.
Good talking to you. Thank you.
Absolutely. That is Dan, who is the CIO and portfolio manager over with ticker MSOS and YOLO with AdvisorShares. And I the beds and the EATs is definitely interesting topics there to go ahead and check out for the ETF side of things. And we'll continue now the conversation to a different angle in terms of getting a bit more into the ETF space, as we've got Nate Geraci, who is the president of the ETF Institute. Nate, welcome to the show.
Thank you. A pleasure to be here.
Absolutely. Before we kind of dive into the nitty-gritty aspect of things, give us a little bit of insight on what is it that your company does.
Sure. So we offer professional education and certification around ETFs. So we offer education on all of the foundational building blocks around ETFs, best practices on how to trade, the history of ETFs, really everything that you can think of around the ETF structure, we're educating the marketplace on.
Yeah. When it comes to education of it, there's so many different kind of resources that are out there, right? So what do you kind of specifically focus on, especially with the increasing popularities I've discussed with the other guests in terms of growth of the ETF? Because it's not just like, oh, hey, invest in the SPY, right? You've got cannabis, you've got beds, you've got AI, you've got, the future of any type of technology you want to get exposed to, you can. Even bets ETF was something that kind of came out to get exposure to the sports betting aspect of things.
Well, you bring up an interesting point because, in my opinion, ETFs are clearly the investment vehicle of the future.
Yeah.
And if you consider where most of the innovation is occurring in asset management overall right now, it's in the ETF space with some of the products you just mentioned. Well, what does that mean for investors? I always say the ETF innovation is a double-edged sword in the sense that it's been tremendous for investors. I think it's clearly a good thing overall, as it's opened up access to so many different investment strategies and asset classes that investors previously couldn't access easily and efficiently. And that's fantastic. But if you think about that innovation also has added a tremendous amount of complexity to the marketplace because investors have to understand that innovation, which isn't always easy. And that's where the ETF Institute comes in.
And what's great about it is the fact that you have something that's kind of sets you apart with the CETF designation and other certifications in the industry as well. Why do you think it's important for professionals in this field to kind of have that, especially in this space where you have a lot of gurus and furus, if you will, in the FinSwit and kind of YouTube space as well, right?
Well, again, I think it comes back to the innovation that I was just discussing. There's so many new products coming to market that I think it's important for investors and advisors to stay on top of those types of products, make sure they understand how to use them, make sure they understand how their clients use them and that they use them properly. And so I think it's important to have that foundational ETF education, which we offer, but also keep up with the changing times and the evolution in the space.
Any terms of, so with the evolution of the space, what are some emerging trends or innovations within that you kind of find exciting, right? We talked about how they need to stay on top of it. What do they need to stay on top of with what you're seeing?
It's interesting. There's just so much occurring right now. I think the one that is front of mind for a lot of investors right now is spot Bitcoin ETFs. And I don't think there's any question crypto ETFs in general are emerging trend or innovation in the ETF space. You look over the past 3 months, there's already been a net $12 billion flowing into these products. They just launched in early January. I think we're going to continue to see strong investor interest in that category. Yeah. And at some point, that category is going to expand. I think we'll see spot Ether ETFs at some point, and potentially some other crypto assets as well. So I think that's one area. Another area where we're seeing a lot of innovation is actively managed ETFs. And it's interesting to me because I think when a lot of investors think about the ETF space, they automatically think index-based investments and passive investments, right? SPY and those types of products. And that's certainly true when you look at the composition of industry assets overall. But if you look over the past several years, actively managed ETFs in particular have seen outsized growth, and there have been a ton of new launches in that category. And what I find exciting is that you think about a lot of the traditional old guard, actively managed mutual fund companies, they are all now getting involved in ETFs, and they're offering their best active strategies in the ETF wrapper. So I think that's a key area to watch as well. And then I'll mention a third area, which maybe isn't quite as exciting, but still a necessary part in a portfolio, and that's bond ETFs. There has been an amazing amount of innovation in bond ETFs where we now have products that offer very surgical exposure to all areas of the fixed income market. So things like single treasury bond ETFs and single sector high yield bond ETFs, single credit rating ETFs. You can really get very precise exposure in how you invest in bonds right now.
Yeah, you mentioned bonds, and you weren't kidding. The people don't find them as exciting as some of the other in terms of Bitcoin and possibly, hopefully, if we get the ETH side of things. But I think it's great to mention because I know how to trade futures, I know how to trade stocks, I know how to trade options. Bonds is not something that I'm fully knowledgeable in. So having exposure to that ETF is definitely something that kind of helps out the average investor have that exposure of that 80-20 mindset that we kind of grew up learning about as well. And then I know you mentioned kind of the innovation and trend side of things. I know we have our guest coming up afterwards, David, who has a music ETF, and I wouldn't have even really thought about the different companies that have exposure to that, not just from the streaming side, but also just from the label side and the concert side of things as well. Any final thoughts that you wanted to kind of discuss today? Topics I didn't get a chance to bring up. The floor is all yours.
Yeah, like you mentioned David and his ETF. I know you were visiting with Dan earlier.
Yeah.
With this ETF. What I think is important to convey is that when you look at the ETF space, what it has really done is open up access to, again, nearly every type of asset class and investment strategy. And from my perspective, that really boils down to three things. So it is that access, its cost, and its convenience in the ETF wrapper. And I was talking about spot Bitcoin ETFs earlier. I think that's the perfect example because if you look at those products, they're providing access to an emerging asset class in Bitcoin, which wasn't previously available to all investors, at least in the way that they were accustomed to.
Yeah.
And if you look at the price point of those ETFs, we're talking 20, 25 basis points in annual expense ratios, which I think is remarkable. And then that last part, the convenience. These products are convenient to access, right? You can access spot Bitcoin ETFs right in your Schwab or Fidelity account or wherever you invest with a click of a button. You don't need a digital wallet or a separate account at Coinbase or some crypto exchange. It's all made easy. And I like that example because I think that's the power of ETFs. And we've seen this done year over year for the past 3 decades. The first ETF launched in 1993.
Yeah.
And we're still seeing that innovation. And so again, something like the music ETF, I think is a good example. That's a thematic ETF. If you want to get exposure to that category, it allows you to do so. So I think that's the key here. It's that ETFs offer access at a low cost, and there's that convenience factor.
Yeah, anytime I tell my friends, they're like, oh, hey, like, what should you invest in? I'm always scared because, one, I'm not certified. I don't do this at a professional level to that degree, so I'm always afraid. But what I'll always say is, hey, if you believe in AI, if you believe in the future of music, if you believe in the future of any type of sector, here are the different ETFs that you can add to your portfolio. That way you're diversified. And the only way you're wrong long-term is if the technology and the idea that you believed was incorrect, and not necessarily because one company didn't execute on the idea that was great, but the execution was just below.
100% agree. The challenge, though, is there are now over 3,400 ETFs, which gets back to what we were discussing earlier.
Yeah.
I don't want to belabor the point, but it's that education, understanding how you go about filtering through those 3,400 ETFs, what you need to
Yeah.
look for when you're conducting due diligence. That is extremely important. So it's very exciting times in the industry, but like I said, the complexity level has also come up as well.
Yeah, I mean, that's the downside of innovation is as you have more folks involved, sometimes you lose a little bit of quality. But I really appreciate your time today, man. Thank you so much for hopping on.
Yep. Thank you for having me.
Absolutely. And that is Nate Geraci, who's the president of the ETF Institute. So if you guys want, you can definitely build your ETF expertise and separate yourselves from your peers by signing up for the ETF Institute Certified ETF Advisor Program that will take you from zero to hero in ETFs. Check out the link below or scan the QR code on the screen to learn more about it, becoming an ETF expert and taking advantage of the growing industry. And it's absolutely right? There's so many different ETFs now. You got to find a way to make sure you're with the ones that can set you up for success long term. We've talked about the music ETF so much. I feel like it's only right that we go ahead and end the show with this man right here. I want to go ahead and bring on my guest, David, who is the founder and CEO of MUSQ Global Music Industry ETF. The ticker is MUSQ. David, how's it going?
Zunay, great. Thanks for having me on your show.
Absolutely. I mean, we've had such great conversations already. I know Nate had some great things to say about your ETF, but just for the viewers that might still not get it, give us a quick, brief overview of what is it that your company does.
Yeah, so I'm the founder and CEO of the MUSQ Global Music Industry ETF, Zunay. So we capture the growth and innovation of music companies around the world across 5 different verticals: streaming, content and distribution, live music events and ticketing, equipment and technology, and satellite and radio. MUSQ is the first pure play music ETF, giving investors a front row seat to this booming industry.
Why did you why the creation of this MUSQ Global Music Industry ETF, right? What does it aim to achieve at the end of the day?
Yeah, so first, I've been investing in public and private companies for the last 25 years in music. I owned a lot of music publishing companies. I used to own all the rights to MC Hammer, JJ Cale, Nick Drake, a lot of Michael Jackson songs. And what I realized as an investor and as an owner, like, all your money was locked up in these firms. If you wanted to be an investor in music historically, you had to be an LP at like Blackstone, KKR, Apollo. Your money was locked up.
Yeah.
Today, you have so many music companies. So what I really wanted to do was create a very liquid and portable way for retail investors, because now you have there's over 100 public companies worldwide. And we've designed an index to really and an ETF to capture the growth and performance of this industry and let investors get exposure. Like if they want exposure to Tom Petty's, acquisition, or Springsteen or Neil Young, or they want to get exposure to Taylor Swift. Look, Taylor signed to Universal Music Group through Republic Records, right? That's a top holding. She has a deal with Live Nation. That's one of our top holdings. She has publishing deals with Sony. That's one of our top holdings. So you could pick any artist, whether it's The Weeknd, Drake, Taylor Swift, and we're giving investors exposure. We want to give investors a taste of all that success.
I'm sure the Swifties are listening and about to start investing. I think liquidity is also something where it might not be as easy to invest in certain artists, but you can kind of get a slice of the pie by going through the routes that you've mentioned with your ETF. Let's get a little bit into the weeds with terms of, give me an overview of the investment strategy, right? To capture this performance that you're talking about, what goes into that mindset when you're trying to see which companies to include?
Yeah. So this is a passively managed fund. Okay. The eligibility requirements are such that all the companies have to generate greater than 50% of their revenues from music, or they have to be a top 5 player or control more than 10% global market share in any of those 5 verticals. So we have companies like Universal, like Sony, like Live Nation, like Sphere in Las Vegas, like Madison Square Garden. And we also have big company names like Apple, Amazon, and Google, which, even though they don't generate more than 50% of their revenues from music, they're still top 5 players. Because after Spotify, Apple, Amazon, and Google are like the second, third, and largest, streaming player, right? And in the US today, 84% of all music consumption is dominated by streaming. So we had to give investors exposure to these names, but those names are capped at 7%. So the entire fund is market cap weighted. We have small cap, mid cap, and large cap names. A lot of foreign companies are in this fund. Companies like HIM, which is like the largest content company in Taiwan. Companies like Avex in Japan, Tencent. We have all the K-pop companies. We have Hybe, JYP, YG Plus. companies like Believe in France, companies like CTS Eventim, which is, you know, the counterpart to Live Nation in Germany, companies like Click Digital in Great Britain. A lot of these companies are really hard to trade, right? You have to like open up local accounts in these foreign countries, and and it costs money to do that. And so we wanted to create something really portable, really convenient for investors to get real global exposure to this music industry.
You know, I just cracked a chuckle because I had a coworker Slack me about how a Swiftie is listening, how she wanted to kind of get some insights on exposure. So it's good that we have some listeners kind of getting educated on this aspect of things. You talked about Apple, right? Doesn't have its revenue 50% or more coming from the music, but obviously it does so many great things and it has exposure in terms of market share there. How do you kind of figure out which dynamics and how to kind of weigh things when you're putting these ETFs together? What goes behind the decisions to have the dynamics of the music industry?
Yeah. So, well, first, you know, we scrape the universe of music companies, okay? And so they have to generate more than 50% of their revenues from music. Or like I said, they have to be a top 5 player. So today, like, you know, Apple, Amazon, Google, they're big players in the global streaming business, right? And so we had to include them. But, you know, today about 35% of our fund is all streaming companies, right? So we've got 14 streaming companies in the fund. A lot of the names I mentioned, companies you haven't even heard of, but are important, like Genie Corp and Kakao. You never heard of these. These are the top 2 streaming companies in South Korea. These are big companies, right? Companies like Tencent, like Click Digital. So 35% of these companies are streaming, 35% are content, right? These are all the record labels you mentioned before. They're also all the publishing companies, royalty trusts, right? Companies that these songwriters and publishers are selling their assets to. That's 35% of the fund. 10% of the fund is all live music events and ticketing. We have companies like Vivid Seats, Live Nation, Sphere. Sphere is on fire right now. I don't know if you've been to Las Vegas, the U2 show. They got the Grateful Dead. Dead & Co. is performing with John Mayer. That's like a monster stock. We have Madison Square Garden. And then we've got all the equipment and technology. So that's about 10%. Equipment and technology is 10%. And then satellite and radio is 10%. So those are sort of the weights. And here's something I just really want to get across today to investors, okay?
Yeah.
Guys, music today is the most undervalued, underhyped, undermonetized media asset. That's not me saying that. That's JP Morgan saying that. That's Goldman Sachs. If you read the Goldman Sachs Music in the Air report, right? Music today is an $80 billion business. It's going to $171 billion by 2030. You have 600 million paid streaming subscribers. That's going to 1.2 billion by 2030. Recorded music today is growing at 10 to 12%. Streaming is growing at 11 to 13%. It's growing 20 to 25% in many of the emerging markets like Latin America and Africa and parts of Asia. So music today is really on steroids, okay? And this fund captures all that growth, all that innovation. If you look at all of our holdings across streaming, across content and live music today, revenues are up 10 times from COVID. Okay. Last year was just a monster year. People want to go out and they want to see live shows, and the cost of these tickets keep going up, and you can't replace these experiences. So live music is growing. And then you layer on like AI and blockchain, and that's just putting the entire industry on steroids right now. Tons of artists, songwriters are uploading anywhere from 100 to 150,000 songs a day. So we are all these companies that are driving AI, driving blockchain, giving tools to artists and songwriters to create new music. That's what this is doing too. So we are here at the front row, just giving investors exciting opportunities to invest in these companies. And these companies are on fire right now. Spotify is up 130% for the last year. It's up like 70% year to date. Sphere is up 25%. CTS Eventim is up 25% year to date. Universal, all these record companies reported record revenues because all the streaming companies are now raising rates for the first time in 15 years. Music is cheap. You pay $11 a month. You pay double that for Netflix, for HBO Go, for Hulu. So these streaming companies are going to continue to raise rates, and then 70% of those revenues are going to pass down to all the record companies. And that's why literally Warner Music Group, Universal, Sony, all the smaller labels, they all reported record revenues in the last quarter for that reason, because streaming is growing, the number of paid subscribers is growing, the amount that they're charging their subscribers is growing. So they're developing new users and they're squeezing incremental revenue from existing users. And there's very low attrition because music is cheap. Like people actually have multiple music accounts today, right? Because the curation is different on Spotify, right? Spotify may have Spotify clips and Spotify Wrapped, like we talked about, right? Apple may have something else. I just checked out Spotify has this cool personal DJ right now. I like logged on yesterday. They're like, "Hey, what's up, David? What can I stream for you today?" It like knew me. So all this AI stuff is really engaging. Um, and so kids love it, adults love it, families love it. They want to have a few of these services, and just music is simply too big to ignore today. It is a massive, massive business today, and there's so many great companies out there, and I just had to make it accessible for investors around the world.
Yeah, 3 points for me. You're absolutely right in terms of the innovation, which I'll get to here in a couple of questions. But music itself might be cheap, but kind of like what you alluded to, live music and concerts definitely aren't, right? I made a Swiftie joke earlier, but I wanted to go to a Taylor Swift concert with a friend, and I had to wait. I was like, yeah, when's that direct deposit going to hit? Because these tickets are pretty expensive. And then another thing that you mentioned was also the technology and the equipment exposure as well, right? Because no matter what musician or what industry you want to follow in terms of music, if they're putting on a live show, they need the equipment, right? We have our own events that happen, and we know that we need a certain type of tech and equipment to make that happen, regardless of what type of show it is. You mentioned, I believe it was South Korea and their numbers in terms of the company exposure you have. So we have a question in the chat about, K-pop. And if that's big, I want to take that question into a broader sense of let's talk internationally and how that industry is growing in terms of any other segments you're focusing on in the international space when it comes to music and live concerts and those type of experiences.
Okay, so that's a great question, whoever asked that. Yesterday, Universal Music Group announced a 10-year deal with Hybe, right, to be the exclusive marketing and promotions company for Hybe in South Korea, right?
Yeah.
And so you got massive bands coming out of South Korea: BTS, Monsta X, Blackpink, Once, which is like the #1 album today. It's like these 5 beautiful women or 8 beautiful women from South Korea. Music's like massive in South Korea. After the US, right? South Korea is the biggest exporter of content. So there are, South Korea, and by the way, and now they bought quality control. They bought, management companies that control the rights to Ariana Grande and Justin Bieber. So
Yeah.
these companies are very intertwined today with the US recorded business. And so, there's like literally like 12 K-pop companies in our fund, from JYP, YG Plus, Hybe, all these streaming companies. So the content's big. And it's just interesting. Whoever asked that question must be on the pulse, because yesterday a huge deal was announced, to take advantage of all that South Korean content.
Yeah.
So we have to give investors exposure to that.
We can thank Sydney Osborne, our viewer, consistently coming back for these webinars and shows. We appreciate her question. Let's go ahead and final question for me in terms of trends and technologies. I told you I'd bring this back, and something that I shared with you in our prep call was Pandora, right? I'm in college and I love certain type of music, anything that's catchy. I don't care what language it is, Latin, Arabic, Persian, French, it doesn't matter. As long as there's a good beat and it got a catchy chorus, I like it. And Pandora, for the folks that might be a little too young to know what it is, it would kind of take that music and scientifically suggest other types of songs similar to that same genre, the same beat that you might end up liking. That to me was an awesome innovation. Unfortunately, they couldn't, they got taken over in terms of market share and all that by Spotify. But on that trend though, what are some technology advancements that you're seeing, especially with the impact of AI and blockchain kind of being the focus of what everyone's talking about today?
Yeah, so that's a really great question. So, look, all these music streaming services today are all using AI to generate incremental revenue from their subscribers, right? Whether it's personalized playlists, now you can announce kind of lyrics, and they can give you songs that have around your favorite lyrics. Like I said, they have like DJs that are curated and personalized to you. There's tons of short form content. So Spotify is like taking over kind of some of that market share from like TikTok right now. They're really moving in because Universal Music Group pulled their catalog. So they're really trying to go after that TikTok audience right now by creating like, content that flows up and down the screen. We talked about like stuff like Spotify Wrapped. There's the Spotify Clips is like, so all this stuff is really around getting to the consumer better. Blockchain is having a huge impact just as the digitization of music is growing. So what we're talking here is the front end of music, but just so you understand, on the back end now, direct payment rails are being set up between artists that have their music streamed, and they can actually get paid one penny per play, right? So they can actually get paid when they in real time instead of waiting 9 months for the performing rights societies to collect their revenue. So that's how blockchain is changing everything. All the companies in our fund, from Yamaha, Roland, Dolby, Sonos, these are all providing tools to artists to sample, to create new music, which they're uploading today. You have all these do-it-yourself services today, like DistroKid and Cobalt, where you can actually upload and distribute your own music today. So it's easier than ever for an artist to literally create their own music and upload it the next day, get paid for it right away when it gets played. This is what's going on right now. It's the digitization of music on the front end, whether it's personalization and AI, and on the back end with blockchain and the way artists, songwriters, and producers are getting paid.
Yeah, I mean, there's just so much innovation that's happening on that aspect of it. You had TikTok that just added another layer of music to like these trends that are happening. And then you have the common man and woman that can create their own videos and dances and gain popularity through it while, having music in the background that kind of gains exposure to the artists themselves. And you have Spotify. You mentioned the DJ aspect of it. The other day I logged on and I can just kind of flip through what type of music I like, and they would suggest different things. So a lot of innovation happening on that aspect as well. David, it's been a great conversation, man. Love music. I think it's, such a cool and key part of a lot of people's lives. It's interesting to kind of get some exposure from an investment standpoint as well. So I appreciate your time here today.
Yeah, no, thanks a lot for having me. Everyone, please feel free to follow me on LinkedIn. I write about music all the time. And I encourage all the investors who are interested, go read the Music in the Air report by Goldman Sachs. Lisa Yang is the top research analyst in the world on this subject. Go listen to her interviews, go read the report. And you can also look at the IFPI report and the RIAA report on just statistics around the growth of music and why it's a compelling investment opportunity. Thanks a lot for having me, Junaid, on your show today. Appreciate it.
Absolutely. Thank you for your time. That is David, who is the founder and CEO of MUSQ Global Music Industry ETF. The ticker is MUSQ. David, thanks again one more time.
Thank you.
Absolutely. And, hope you guys enjoyed these conversations that we've been having. And I think it's kind of important to go back to how back in the day it was just kind of SPY that they talked about, right? Where it's like, oh, put your investments in SPY and you get exposure to the top 500 companies. Now it's kind of like sector specific, that it's like, oh, you know what? I believe this industry and this sector is going to be huge. I believe it's the cannabis space, the music space, the AI space, the blockchain space, whatever it is. Now you can kind of go ahead and get exposure to it. And that's kind of been incredible for us as well. And, lastly, I would kind of highly suggest that if you are interested to definitely, have your ETF conversation going in another direction, build your ETF expertise and separate yourself from your peers by signing up to the ETF Institute's certified ETF advisor program that will take you from a zero to a hero in ETFs. Check out the link below or scan the QR code on the screen to learn more about becoming an ETF expert and taking advantage of the growing industry. And as technology continues to grow in ways that we never really imagined, ETFs are definitely a way to kind of gain exposure to that. And with that being said, you, the viewer at home, we always appreciate your participation in these webinars, because you at home are the reason that we put so much effort into bringing on these guests that are experts in their field so you can become financially independent. Of course, on behalf of myself and all the men and women behind the scenes that made this webinar possible, we thank you for watching.